camera and then we have this.
Okay.
Now, we're showing noise. I think we live on this one now.
We're good.
So, you know, top idea is jump in for us to show up.
Et comme ça, moi, je vais
So the thing is, since we have Haitian speakers, Haitian listeners, so it's gonna introduce the show in Creole, then I'm gonna jump in, do the English version, and then sometimes we will explain a little detail to the Haitian community.
Sure.
Ok. Nous disons tout le monde et bonsoir, côté que nous connaissons l'émission qui arrive là quand même, à ce là qui c'est jeudi et 5 juin, et côté que nous là encore, on fait encore nous là avec nous, dans la cour, Lakou Trankil, c'est émission par nous. Et dans la radio Cascade 94.5, côté que à ce moment-là, nous avons invité ensemble avec nous, c'est Kelly James. Kelly James is not Asian, he's a Jamaican American. He's a professional on the financial professional. He's here with us tonight. Bon, à ce moment-là, nous avons James Kelly ensemble avec nous. C'est un professionnel de financial. Nous sommes là avec nous. Pour dire que nous allons parler de finance. On fait encore, nous connaissons Lakou Trankil, même si il est pas noir, il a pour présenter nous tout le monde, nous l'avons présenté. Et à ce moment-là, nous pas Johnny ensemble avec nous, c'est Franck, l'équipe là.
Johnny en vacances.
Johnny en vacances. Johnny pas là ensemble avec nous. Johnny, en tout cas, Johnny, bon vacances, papa. Fais bail bien. Pas oublier. Nous saluons un débat. Mettez en nous, directeur nous. Nous saluons tous les amis nous. Et côté que nous pas oublier les amis, nous frères nous dans la radio. Qui c'est Renaissance. Nous saluons tous les amis. En fait, il faut nous commencer et pour
Parce que nous avons des travail pour les gens qui parlent anglais et tout. So,
ok, pas de problème.
So I want to thank all the guests, all the English listeners. We want to thank you for joining the show. Right now we're in different many platforms. We're on TikTok, we're on Facebook, we're on YouTube, and even WhatsApp. So, I was away for a week. It's good to be back, to be hanging out with my friend Dawson. Today we have a great guest for you, my good friend Kelly James. He's a financial advisor. And, we're gonna give him the mic to introduce himself, because I really believe that, we need to be informed, especially the topic we're gonna be talking about today, which is life insurance, a little bit, as retirement and so on. So, because I think that many times that, we make bad decisions because we misinformed, we need to really know about, the life insurance aspect, So, without further ado, I want to, let Kelly give the mic to Kelly James to just, tell a little about himself.
Hi. So, as he said, I'm Kelly James. I'm a financial professional. I'm registered, so that means I have my Series 6, Series 63. I can do mutual funds and investments, all the boring stuff. So I've been in the industry now. I would say about 15 years. Helping people with retirement planning, life insurance, and even health insurance, in the past. So yeah, I'm excited to get this going and answer any questions that I can.
Great, awesome. Dawson, do you wanna, you have any question in mind? Des questions, t'as demandé, over comment ça va?
Yeah,
Yes. So, since we have both, bilingual listener, we're gonna be doing this in English and a little bit of Creole from time to time. We're gonna jump in because we need to make sure that everybody get this important information. So, for those people who haven't, listened to me yet. I'm also a financial advisor, and I do insurance and so on also. The reason I mention that is just I'm gonna go based on a little bit, tell you about what I encounter selling life insurance to our people, and then maybe you could jump in and tell us your feedback.
Sure.
Because for some reason I feel like when we selling when we trying to service people, when I sell people, Caribbean people, African American, the minority, that they always, feel suspicious about life insurance.
Mm-hmm.
For them, they feel like it's not something that they need, for some reason or other. I'm like, why is it that it's so easy for them to, that they will put, they will get an auto insurance, they will get a homeowner insurance if they own a home. They even go as far as getting, phone insurance, right? But they will not worry about life insurance, Why is that, Have you encountered the same issue when you talk to many people? They don't know the importance of life insurance. And then if you could go on and just let the people know why is life insurance so important? Because where I speak to a counterpart, other insurance agent that's not black or that's really catering to more of the European descent, I don't think they get that type of feedback as far as to that the importance of life insurance. I don't think they deal with that with the other people as much as we do.
My experience has been mainly that. Am I coming through okay? Am I too
Yeah,
focused?
no, you're good.
Okay, all right. My experience has been a lot of times people, when it comes to like the minority community, that's Caribbeans, African community, even Central Latin American community too. For us, it's for people like us. They typically, it's a cost thing naturally. It's kind of abstract, right? It's like life insurance kind of exists in this kind of abstract place where, as long as you're alive, why do you need it, right? Paying that really isn't it only pays a benefit when they die. So there's no living benefit to them. A car insurance, if they don't have car insurance, their car can't be on the road. So they have to have it, you know what I mean? Whereas when it comes to life insurance, if they don't have life insurance for 2 months, 3 months, a year, 2 years, their life kind of, as if they don't die, their life pretty much goes on the same. So, you know, it's tough to ask someone to think about what happens to their family when they're dead, when they're 30. Because people in their 30s, they think that they're invincible still, right? I know I did at least. So yeah, I think that's part of the difficulty. And especially when it comes to the type of life insurance, for example, the permanent life insurance. Sometimes it's a little more expensive than term, so to show the benefit of that, paying more money for less coverage, people, it's hard to kind of wrap your head around why it's important. You know, so I think it's more of a, it's like, I think this is a great show. You guys are doing the work to educate people on it, and to get more people to think about it, to put it in front of their mind, you know what I mean? Because you're right, it's more important than their phone insurance, right? But their phone, they know, they break their phone, they're gonna have to pay $1,000, $2,000 for a new iPhone, right? But if they have insurance, they pay a $100 deductible, right? So to them, that makes sense in the moment. They're not really thinking about what happens when they pass away. So that's what I normally see.
Okay, so I'm just going to translate a little bit about you know, what was said. So, disons qu'on m'a dit pour qui raison puis le monde penser que you know really pas mettre corpo assurance important pour le corpo assurance de vie, il pas considérer ça important, même les considérer you know assurance machine, assurance téléphone, assurance car, il plus considérer ça plus important. Disons comme ça, premier bagage est à cause des prix, deuxième là qui grand moun yo ouais bonne ya vivre là assurance de vie par exemple quel bénéfice pour yo bonne ya vivre là yo plus you know pour et sur mourir que famille va bénéficier et grand moun qui yo pas care de famille yo le vinn mourir pas care pas penser de ça vous comprenez Dawson you want to jump in and ask some question, anything, you know, n'importe qui sont événements dit, qui ça ou de la assurance là, ouais.
Okay. If I need a insurance like a $1 million insurance, how I could have the insurance for $1 million?
Well, it depends. I mean, when you're thinking about life, especially life insurance amount of $1 million or higher, right? There's a fairly high, you know, death benefit. That's what they call it. You pass away, the benefit to your beneficiaries. It's death benefit, face amount, same thing. So, to answer your question, the cheapest way to do it would be a term policy. So you pay, you know, based on your age, is you pay X amount of dollars, and if you pass away, it pays that death benefit to your family or loved ones, whoever you want the beneficiaries to be, right? Normally term is for like 10, 15, 20, 30 years, right? So it's not really a, the policy, once the term ends, 10, 15, 20, 30 years, the policy ends and that's it, right? Now, if you're thinking about a permanent policy, a policy that lasts you forever, like a whole life, VUL, IUL, those kinds of policies, $1 million in coverage based on your age wouldn't be cheap, right? Because the truth of the matter is that to a life insurance company, all insurance companies, all of them, but with life insurance companies, they're thinking about risk. They have to pay a death benefit when the person passes away, right? Mm-hmm. So the cost of the insurance is going to be directly related to the amount of risk it carries to the life insurance company. So with term life insurance, it's something like 98% of all term policies don't pay a death benefit because they either lapse or the person survives the term, 10, 20, 30 years or whatever. That's why it's so cheap, because they never pay death benefit. It's a really low risk investment for the insurance company, or a really low risk contract, I should say, not investment contract. But a permanent policy, when you buy a whole life, a VUL, universal life, whatever it is, when you buy those policies, they're designed to last your entire life, so they will pay a death benefit. That's why they're so expensive, because there's no term when it can end. It's going to end when you die, then they're going to have to pay a death benefit. So someone who needs $1 million in coverage, they're probably, depending on their budget, they're probably better off splitting it, maybe doing a very little bit of permanent coverage and then the rest in term to make the difference. But to answer that question, I would say it depends on why you need the coverage. Like if you just bought a house recently, and you have very young kids at home, you might just need a term policy, 5, 6, 7, 100,000, to make sure you pass away, your mortgage is paid. That's a great example for why you need a term policy. So yeah, there's ways you can address that need of $1 million, whether it's permanent or term. But to answer your question, you would just get the policy that you can afford, right?
Yeah, so dans seulement des pour que ça time pour access for $1 million. So monsieur explique qu'ils occasion access for $1 million, il y a différents types d'assurance que vous pouvez prendre. So vous pouvez term là plus bon marché, occasion $1 million plus bon marché. Que tu sois pour whole life, ça fait plus de temps, ou that is cool. But I want to follow through. Yes, go ahead.
How much it could be?
No, but he cannot tell you just like that. We need to sit
We have
down
to
with
sit
you.
down.
Yeah, because I think the best thing, matter of fact, that go right to the question that I wanted to follow up with, which is, what is the requirement for you to get a life insurance? Because you think it's just that easy. You tell them I want $1 million. Can you go into detail whether we know we have to have the age, the type of job you do, whether you're female or male, like the insurance will be more if you're if you're male than a female. If you could go a little bit for me on that.
Unfortunately, guys, men normally die first.
So men is more money.
Men die first. So because of that, the life insurance is always cheaper for women because they don't die as quick. With that said, there's health concerns, especially with something like $1 million in coverage. They're going to be looking at your overall health. They're going to probably want blood work. They're going to they're going to want to see that. They don't look at your income, but they don't really check your income. They just want to see that you're working and that you have the money to pay the premium, whatever it is. They don't really check. Most life insurance companies won't do background checks or anything like that. Now.
And his age is a factor,
Age
right?
is definitely
And then
a
also
factor.
the type of job he's doing.
Yeah.
Is it risky for them to give you $1 million? Because if you're driving the plane or you're doing something, they're not gonna want to give you $1 million.
Listen, they're not going to give you. It's something you buy.
Yes.
It's not something they're going to give you.
No, but this.
But the problem I got with my insurance,
Yes.
they call that life insurance. It's a death insurance. They don't give you the money.
You're thinking about it. I see your point, and you're not wrong. But but let me tell you what it's for. A lot of people think that life insurance is really to insure the person's life. What life insurance is really for is to ensure the person's capacity to provide income. So let's say you're making $100,000 a year and you have 2 young kids or whatever, and you pass away when your kids are 2 years old. They're gonna look at, okay, you make $100,000 a year times 20 years. You would have to replace that income to take care of your children until they get to 18, 20 years old. It's the replacement of it's the financial loss of losing someone, not so much just because the person died. It's the financial loss of losing that person, right? What it would cost to, do things like provide for the burial of that person, or to do things like, continue to take care of children and family member after the person dies. So It's really you're transferring the risk of losing that person's financial contribution. That's what life insurance is really for.
So that's it. Mm-hmm.
Uh-huh.
And so many people don't understand, like, people will get life insurance, right? So let's say you had cash in the bank, right? Someone in their 50, right? They're looking to retire, and then they say, okay, I have cash, but I still have people that depend on me, right? So, you know, if you could go a little bit into that, where now you buy the life insurance for $1 million, right? Now, if you had $1 million in your bank, now you get to, you could spend that money, because now you no longer worry about leaving that money for your
Exactly.
loved one, because you have money now, and a life insurance in case something happens to you.
Yeah.
You know?
Also, there's the estate tax, right? So a lot of times, if you have like what I see often is people have a big IRA, like $500,000 IRA,
Yes.
and they're like, oh, I need, if I pass away, they can have my IRA.
Yeah.
A $500,000 IRA, what that creates for the person, your beneficiary, is a tax fraud. They have to pay tax. Even if you leave an IRA to a trust, there's tax. None of that money was taxed yet. So because the death benefit is tax-free of a life insurance policy, you create a way to at least cover the tax of the assets you leave behind to your family, right? So the death benefit, what's important is the death benefit is tax-free to your beneficiaries. So if you had the money in a brokerage account, for example, and you had, let's say, $500,000 in a brokerage account, the capital gains, when that goes to your family, it's taxed, right? So unless you leave it to a trust, then it gets a little more complicated. But for the most part, assets you have that have capital gains on it are taxed when you pass away, when you leave it to your beneficiary. Life insurance policy creates tax-free benefits or tax-free money that you can then give to your beneficiaries.
So you have a question, or so my thing is, earlier you talk about as far as some people see life insurance like, hey, that's if I die, or I'm not even thinking about my family in the future. Because I remember one time I went to see a couple, right? Husband and wife, and I asked him, okay, you need to get life insurance for you, to leave something for your wife, and your wife needs to get life insurance, in case something happened to her, right? So he told me that, why would I want to leave money for my wife so she could get a new husband after I die? You understand? Why would I want to do that? This is pour ça quitter comme pour madame après ça pour comme la dépenser avec mon new neg. So I say that for those people who are selfish, who doesn't want to think about their kids or their wife, can you talk to them about the living benefit? Because I think some people would benefit, they want to leave the money, they want to use the money while they're alive. So the life insurance does have some living benefit, if you could go into that.
Yeah, so there's a couple of benefits. For example, there's like a chronic care, long-term care living benefit. A lot of times people, let's say someone's working, they get hurt really bad, and they're unable to work, and they're hurt so bad that they need home health care. Your life insurance can then be used to cover your home health care while you're alive, right? Now, certain types of life insurance, like whole life insurance or universal life insurance, accumulates cash value. Cash value that you can draw from tax-free as long as the policy remains in force. You can withdraw that money tax-free. And the cash value potential on these permanent policies can be really substantial. I knew a lady who she came to my office because she had a policy that she set up with another agent. That agent left the company a long time ago. So she was looking for an agent, she found me, and she was gonna cancel her policy. Now, she wasn't paying that much. She was paying like $50 a month. She was paying it since she was really young. And she goes, how much cash will I got? The lady was able to go back to her country, a Central American country, I forgot, with $40,000 tax-free.
Wow.
You know what I mean?
That's a lot.
Yeah, that's something. Right? That's a living benefit that she's not leaving that to anyone. She closed the policy, she has this tax-free. She closed the policy. She'd have to pay capital gains tax because the policy's closed. But in her case, it did provide her with cash value that she was able to use while she was alive. And most permanent life insurance policies do accumulate cash value in the policy that you can use while you're alive.
Okay, great. Let's talk about the different policy that they have. I do want to touch a little bit on the cash value, but let's talk about, like the permanent policy and the term policy, like if you could break down a little bit, the different capital policy that they have.
Okay, so you have the term. Without going too much into the weeds, there's a couple types of term policy, but for tonight, there's just one term. It's a term policy. You can do 10, 15, 20, 30-year term. And what that means is when that time is up, the policy just ends, okay? Then you have the permanent variety of policies. You have universal life insurance. Universal life insurance, you are not guaranteed a specific interest rate, but you will get interest from the insurance company on your cash value, right? So it's basically, as you make your payments accumulate cash value inside the policy. Then you have IULs, Index Universal Life Insurance. An IUL, the cash value gets annual interest based on an underlying index, right? Normally it's the S&P 500. Then you have one of my favorites, the VUL, V as in Victor. A VUL, the cash value is invested in what's called mutual fund sub-accounts. So a lot of people use VULs like Roth IRAs. You put your money in there and you're invested in the market with the policy. So you could get substantial cash value because you're getting interest and growth with the market, right? And then there is the whole life policy. I like whole life too. I'm more of a VUL guy, but I like whole life. Whole life gives you guaranteed interest plus dividends, especially if you get it from one of the better, I shouldn't say better, but a mutual company. Mutual company.
You like the company? Yeah.
Our life.
Yeah, whole life can give you nice cash value. Like most whole life policies turn about between 5 and 6% annually. Now, while that's not, 5 to 6% not crazy, but it's solid. You know what I mean? If you're getting 5 or 6% interest on your money, that you don't have to worry about the market going up and down. It's a whole life policy. You're getting guaranteed interest.
It's fixed interest.
Yeah. Plus, you're getting dividends from the insurance company. By the time you get all that combined, it's like between 5 and 6% annually, right? So it's you can get some substantial cash value in a whole life policy.
So since Dawson said you like the cash value, so can you go into what can you do with cash value? Because I like I told people, I do a little bit, insurance too. I know that people could use it for, to pay for tuition, college tuition. Some people use it for retirement, and there's other things you could use it for. Some people use it to buy a house down the line.
And I've seen those things with my own eyes. People could really use it for that stuff. So let me give you a scenario. You have person one. Let's just say me and you. I decide I don't want life insurance. I don't want to leave any money to my, okay, fine. Let's say I want to leave money to my family, but I don't believe in life insurance. So I'm gonna put $200 a month into a Roth IRA. Now, there's no problem. I actually happen to like Roth IRAs. They're great. I'm just giving you an example. And then, for example, you buy a VUL, where your cash value is invested in the markets, right? Now, after 1 year, that's $2,400, $200 a month. I pass away. My family just gets $2,400. After one year, you pay $2,400, but you had a $100,000 death benefit attached to your policy. You pass away, your family gets the $100,000 plus whatever cash value the policy had in it. Might end up being like $101,300 or $400, something like that, right? So for the same amount of money, he got death benefit plus growth on his investment. I just got the growth on my investment, and mine is taxable. His is not, because inside a life insurance policy, when you pull the money out, the policy stays open. It's tax-free. The capital gain, you don't pay capital gains tax, as long as the policy stays in force. So it's the cash value is really, you can do a lot with it, and there's no, with the Roth IRA, again, I don't dislike, I like Roth IRAs, they're good tools, but a Roth IRA, you pull the money out before a certain age, you pay a 10% penalty, whereas there's no penalty with a, with a permanent life insurance policy, the cash value in there.
Oh,
Sorry.
oh,
No problem.
Yes. So, Dustin, you want to add anything over the? Okay. So, one of the things that maybe you could go explain this to me. I had a aunt that had a policy for her husband. So I remember she came to me. I can't remember. I think maybe it was IO. So she came to me and she said, I tell her this policy is based on the market, right? So if you don't put money in there, what's gonna happen is gonna run out of money. And then, it's so sad that the husband got sick the month before the husband about to expire. They sent her the policy that said that it ran out of money. But I told her this like 5-10 years ago, but I'm family, so she doesn't believe, in me, which is sad. Sometimes we get that. Can you explain to the audience what happened in that case? Because a lot of people really have bad experience, buying insurance, or they hear things, but they never get the full story.
I understand.
Yeah.
So a couple of things with universal life insurance. There's 3 types of universal life. There's regular universal life, IUL, and then VUL. The VUL is really tied to the markets. You're really invested with the VUL. VUL, you get real stock market returns, right? With an IUL, it's called an index crediting strategy. So you're not really invested in anything, but on an annual basis, they look at the performance of the S&P 500 usually.
That's for the IUL.
Yeah, it's an IUL.
So they look at the stock market.
Yeah, they look at the index and they see how it performed. And let's say the S&P 500 got 20% growth throughout the course of that year. They give you a cap rate of, let's say, 9%. They'll give you the 9% on your money. Now, universal life insurance policy, this goes for universal life, index universal life, and variable universal life. As the policy starts to age, in the first 10 years or so, it doesn't really matter. This isn't really the case, but especially after 10 years and beyond, the death benefit is really tied to your cash value. The cash value starts to support the death benefit and hold it up a little bit. So if you pull out the cash value from the policy, let's say you have $100,000 in cash value, let's say you have $50,000 in cash value in the policy, and you take out, let's say, you have $50,000, you take out $45,000, you leave $5,000 in there. Then you have 2 years of the S&P 500 not performing well. So you get 0% interest for 2 years in a row. The policy can lapse because it's taking the cost of the policy out of the cash value. If you're no longer making payments, it's depending on the interest you get to pay the policy's premiums. And if you're not
Based
getting
on
any
the
interest,
index.
yeah. So they're gonna apply.
So did they take your money and invest it, or what did they, what, with the IUL, what, did they take the money you pay every month? What did they do with that money?
I can get technical.
Like a little, just a
They-
little.
they-
Invest your money.
Well, yeah. So what happens is this: an IUL, you're not really invested in anything, but
Okay.
they buy options, right? This is what they do with an IUL.
Okay.
But they take the options and they. So an option isn't really a security. An option is a derivative of a security.
It's
So
like
what-
a bet. You bet
Yeah.
on the
Yeah.
market whether it go up and down.
So what an option says, okay, if the S&P if the S&P does 20% growth, I could execute the option and I can sell it and I can do the thing that I can execute and get money. And they're gonna take that money, then put it in your cash value, right? So you're not directly investing in anything, but you're right, they do invest your money, but they're not really, they're buying options, they're not really buying securities.
Okay.
Go ahead, no, go
Let
ahead.
me ask you a question. Eh, You're talking about
The IUL.
okay.
The,
IUL?
yes, IUL.
Okay,
also-
IUL
yeah.
is a
Index Universal Life, right?
Yeah.
okay. It's a life insurance.
Yes.
But if I want to buy action on the IUL, I could just come to buy the action or buy the insurance from
You
the.
could go buy in the stock market, right? If you want to get the
Well, if you want to buy, I don't recommend that people just buy options and invest with options because it could be a really
it's not
if
for
you don't know what you're doing,
yeah.
you can get burned pretty badly. If
For experience.
yeah, I
investors.
mean, I would rather than buy options, I would just say if you're gonna invest, just like jump on like an index like the S&P 500, just buy that and just sit it and forget you have it. That's what I would say. But you see, okay, I have to get into the weeds to explain this. So the reason they buy options it's because you're not invested in anything. With an IUL, you have a contract with an insurance company where they have to give you interest on your money if the S&P does well. But where's that money going to come from? You're not invested in anything. So what they do is to create the money to give you, they go and they buy options. So if the market does well, they can execute it, sell the options. They can execute the option, get the money, and then put it into your IUL. So they're buying it to kind of, they're creating the capital necessary to put into your IUL. You're not really invested, they call it an index crediting strategy. You're not really invested in anything. The insurance companies, because insurance companies have one rule, they will not lose money. and think about it, if me and you sign a contract where if the S&P does well, you have to give me 9% of my money. Would you want the S&P to do well? Because you have to give me money if it does. So the way that you protect yourself is you take the money I'm giving you and you buy options so that if the market does well, you can execute it and now you have money to give me. Right? So yeah, I wouldn't, it's not really such that you're buying, when you buy an IUL, you're buying options. You're buying an IUL. It's the insurance company that's buying options to protect themselves so they can give you the money and give you the interest that they're supposed to give you. See what I'm saying?
Can we go back a little bit to my aunt's scenario, if you could finish? And also,
Sure.
a lot of people nowadays is asking for IUL, right?
Yeah.
Because they see a lot of people, they're hearing on TikTok, oh
Yeah.
yeah, go do IUL, but they don't even know the in and out of the IUL.
Yeah,
You know?
they can be dangerous if you
Yeah.
don't use them properly.
Yeah.
So, yeah, back to your aunt. I'm not really sure what happened. Maybe she took
Yeah.
out cash. Did she take out
No,
cash out of the policy?
But no, the market went down because and
Oh.
then now there
And
was
she
no
wasn't
money in the
making payments
policy.
anymore.
She was not making no payment anymore.
Wow. Okay. So okay. All right. So two things. If the market goes down, typically IULs have a floor, so you can't lose money. So they have a cap and a floor. So if the index were to go down, you wouldn't lose any of your
Because
cash
that
value.
acts her to put more money into
Yeah.
the policy, but she did not put more money.
Yeah.
And when she came back, I said, you need to put more money, but she didn't put no money at the time, so, and it just keep going, 5, 10 years past.
Yeah,
And then
that's
the policy, lapsed.
yeah, that's I'm curious what the if it because it sounds like if she was losing money on it. Well, you can lose money in an IUL too. So what happens? So an IUL has a floor, so you potentially can't lose money. But with a VUL, there's no floor. So whatever the market does, up or down, is what
So I
happens.
think
in
maybe it
your
was the
account.
VUL.
It could have been
Yeah,
a
it was
VUL.
the VUL, yeah.
But
Yeah.
then
She
again,
didn't buy it from me. She bought it from an outside source. But
Yeah.
when she came, I told her you need to put more money.
Yeah.
Or let's see if we could, roll it over. But it was so many things. But she decided
That can
to do
happen.
anything. Yeah.
so if you don't have a lot of cash value in the policy,
Mm-hmm.
typically that happens more often when people take the cash out of the policy and then they're not making payments anymore.
Okay.
Because remember, let's say the death benefit costs, let's say you're paying $200 a month, that's $2,400 a year. Let's say that out of $2,400, your death benefit costs $1,000 a year for just a death benefit. If your interest on your money does not create enough money to pay your $1,000 a month in policy fees, they'll just take it out of your cash value. So if you're not getting enough interest in the policy to support the policy's fees, and you're no longer making payments, they're going to take the policy's fees from your cash value.
Yeah.
And over the years, the cash value get lower and lower and lower to the point where it'll lapse. That can happen.
Yeah. So, the thing is, the insurance company do, ask, they insure anybody who applying for those two type of, insurance, right? Because they're considered to be investment, right? So they actually do you have investment experience.
Experience, yeah.
And then too many people, whether the agent probably didn't explain to them right, I feel, or sometimes they just, they're just hearing things. Just like I was saying, people are hearing from left to right saying, oh yeah, I just want to add you up, because I spoke to some, like many people, and I'm like, they're just like, I say, let's sit down and find out what you want. No, I just want to add you up. I want to add you up, and they don't have no investment experience, which is sad. But and then when something happens, then they blame the agent or something.
So what happens is with all these policies, when you get the illustration, an illustration just basically shows if you pay X amount of dollars, what the potential cash value could be and what the death benefit will be and stuff like that.
Yeah.
Sometimes on universal life insurance policies, it says how long they expect you to make your payments, so say 20 years and so forth. Normally, if you're paying your payments for the amount of time that it was agreed in the policy, and it accumulates roughly the cash value roughly the cash value that is set on the illustration. If you leave it alone, it will work the way it's supposed to. You have to be careful with them. But if you take all the cash and then you're not making payments, and then the over time it has to take the money from somewhere to handle the policy's fees, it's going to over time reduce the policy's cash value to the point where it collapses. So you have to be careful with it.
Yes. So let's move a little bit, because we don't have too much time left, but let's move on a different type of insurance, right? Because like we say before, some people want to see some benefit now while they're leaving, right? We talk about whole life, and many other policies does have leaving benefit. But there's another type of insurance we don't talk too much about, is the disability insurance.
Oh, okay.
Yes. And one of the, I'm gonna share this story. I remember, I was selling both also disability insurance. And there was a family member that I spoke to, and the reason I'm saying the story is not really to put her down or anything like that. I always kind of like learn from that, right? So see, I'm like, okay, you need life insurance, you need disability insurance, all this thing. everybody, they're financially, they probably can't get everything. But so I told her that, and said, I don't know, not right now. I don't think I need it. So sad, she ended up having a car accident. So she got injured and she could not walk for like years, and then the injury was very serious. So I say that to people, we just don't know when you're gonna need those insurance, and especially disability insurance. To me, I feel like that's the first insurance you should get, right? Because disability insurance cover you, your income. If you're the main person, or even the breadwinner, or the second breadwinner, like you not bringing income to the house, everything stop. You can't pay your auto insurance, you can't pay your homeowner insurance, you can't pay your phone insurance, right? But if you do have disability insurance, you're able to pay every other thing. So if you could go into disability insurance.
So disability insurance, it insures your income, right? So you can pay, it's normally fairly inexpensive, you know what I mean? It's, it's fairly cheap. And what happens is, if a person was to get into a serious accident, particularly off the job, a lot of people have to say they have disability covered at their job, but that covers them while they're on the job. If they get into a car accident outside the job, they're not covered most of the time.
Yeah.
So if they have their own disability policy, it will replace their income for them. They can't do their job.
No,
so like 60%.
Yeah. So a little
60,
bit.
70%.
So there's worker comp insurance, right? Worker comp insurance only happen to something in the job, or 1 hour while you on your way to the job, 1 hour from home, or 1 hour leaving the job going home. That's worker comp insurance. The next one is they have a New York State disability insurance that given to your when you pay your payroll. When you get your check, the job take like a percentage and give you disability insurance. But that's only for a few months, right? Like normally 2 or 3 months. Then some people do get short-term disability insurance. That sometimes cover from 14 days to 6 months. It will cover if anything happen outside the job, but it's limited to 6 months, right? So, and sometimes you can't get too much of it, right? Even though you allow up to 65% of what you make, sometimes it's limited to what they will provide you. So it's always good to get something where like the one that we're talking about, you could do short term or long term. You could even cover up to 10 years.
You can cover up to when they would have retired.
Oh yeah, okay.
Okay.
Yeah. So because one of the things that I see that, especially on my family member that I told you that had the car accident, that like some of the injury that she suffered is lifetime. And then I know that there's the thing where they put in the disability insurance that if you cannot do your own occupation, that you could do something else that will still pay you the difference, like for a long time, So,
Yeah, in some cases, like our disability policies will cover you up to retirement age.
Retirement age, wow.
Yeah,
wow.
so you can get own occupation or any occupation.
Any occupation.
Yeah,
Wow.
so let's say for example you were a surgeon, and then like an anvil falls in your hand or something.
Yeah.
And then you can't be a surgeon anymore. You can probably teach, but you can't be a surgeon anymore. You can't operate anymore. They'll cover you. Even if you can do something else, they'll still cover you. You know what I mean? So that's going to that comes in handy, especially if you're a high income, or even if you're not, but it really comes in handy people who to replace their income.
Yeah. The next one I'm gonna pick up on Dawson. Dawson just had a car accident, right? Dawson,
Yes.
different car accident a few months. Was you hurt?
You hurt?
You were hurt?
Yeah.
So, and then we know that also there's the, like we hear Aflac come by, all of them, they have the accidental insurance, all this other thing. Like there's so many things out there, and I think people is not getting it, like those things where anything could happen. You need to cover yourself. You know, people spend money and other things that's not really, you know, important. You know, but if you cover your money, then you always be able to do what you want. And like whether you have a minor setback, you know, a car accident, or something, you know, life, you know, something that will really, you know, affect you for the rest of your life, you know.
Yeah.
And we also, the long-term, I think you were saying long-term care, I call it long-term care, but I know with your company, they have it as, they have a different name.
Yeah, so there's long-term care insurance.
Yes.
And then there's also life insurance policy that have what we call it a chronic care rider.
Right.
Some companies call it long-term care rider, but basically, if you need home health care and you need someone to come to your house to take care of you, and you can't get Medicaid. Let's say you have too much income or too much assets for it. You can get your life insurance policy to pay you a monthly benefit to help with the cost of home health care or anything like that. So that's actually very important. But back to the disability thing, I wanted to say, disability insurance, it's income protection. You're insuring your ability to earn an income. That's the perfect
word, yes.
You know what I mean? You're insuring your income.
Mm-hmm.
You know what I mean?
Yeah. Why not? That's the first thing you should do anyway, right?
Yeah,
I think before buying a house, you need to, you know, protect your income before buying a car, anything, because if you cannot make any more income, you cannot pay for any of those things.
Yeah.
You know, I know you were out for long, Dawson, for maybe what, you were out for maybe 2 weeks since you had the car accident.
No, it's more than that.
Huh?
It was more than that.
More than that, yeah. So, you know, you could have somebody coming in, you know, because after 14 days, they start paying you.
Mm-hmm.
You know, they start paying you, you know, some money. That's the main thing. So, a little bit about long-term care, and then we're gonna, you know, really close out. The long-term care, so not only that they're gonna give you money, right? Let's say something happened to you, right? Is it 2 to 3 daily living activity?
Yeah.
If you can't do, which is brush your teeth or take a shower or something like that.
Like get dressed,
Get dressed, prepare your own
I think
meal.
one of them is going outside by yourself.
Okay. Yeah. So if you can't do any of those things, you know, you get a letter from your doctor. So the insurance company will start paying. There's some people that they will pay $5,000 to $10,000 a month. Depending on your right?
It's normally like anywhere from like 2 to 4% of the death benefit. So let's say you have $100,000 death benefit, you'll get $4,000 a month, and it will draw from that until you deplete the death benefit.
Yeah. So that's something that you get to really, for those people who don't want to leave nothing for their loved one, that they want to use their money, or maybe by that time your loved one is already old enough to make their own money. So, you know, because by the time you need long-term care insurance, you're gonna be what, in the day 50 or 60 or something like that. So, you know, you get to enjoy that money. So the other thing too, so when they give you the money, you don't have to give it all to the person that's helping. You could keep the rest for your pocket, right? Because you don't want, you know, let's say you find somebody that's not that expensive, and then you getting like $4,000 or $5,000 a month.
Mm-hmm.
You know, you're only paying them half of that.
Yeah,
keep the rest in your pocket.
It's not like, because you see, with long-term care insurance, that's health insurance, and they want to see how much you're spending on the home health care.
Yeah.
They're going to want to itemize it. With life insurance, they don't.
Yeah, they don't. Yeah, exactly. And then the other thing too about the fact that for the people who have asset, that because they're not gonna qualify in the Medicaid, they're gonna try to sell their asset, but they have the look back period that the government look at to see, you know, if you're trying to hide those assets, they're gonna get those assets after they pay for you for Medicaid. You know.
Yeah.
So it's a lot of things. You don't want to deal with that. You have the money, buy the long-term care rider, add the long-term care rider to the life insurance.
Yeah.
You know, yeah. So time is up. So yeah.
No, we gotta take a break, you know.
Oh yes, we did. So yeah, we're gonna take a break. Then when we come back, you wanna give the people your information to reach out to you, and then any last word,
Yeah, sure.
So we're gonna take a break first. You're gonna take a break first, right?
Yeah.
Let's take a break and we'll come back.
We'll be right back.
So don't forget
The
this
what?
is still on the TikTok is still on.
Oh, is that well?
No, I just want to be live still. That's a bad word, Joe, man.
I'm going to. Mm.
Still live?
Yeah, we're live on the TikTok. Yeah, we are there. If I could stop it, let me start. Let me see.
What you going to do now?
Huh?
Huh?
No. So for some campaign?
Well, you can. Vamos jogar essa. O cara não pela aí, tá? O cara vai.
Après ça, va ser vocal commencer.
O cara vai.
I just leave it.
Ça va lá dentro. Ali net. Vi não conhece net mas se bagaba e cada. Ali motion tá.
Yeah, this way? Like that?
Oh no. No, yeah. No. I want to see your chair.
Yeah, that's what I'm saying. But if we want this, then it has to be this way, no?
What about him?
That's what I'm saying. If I turn it this way, you're only gonna take
Okay,
this side.
just do it.
Like this?
Okay, yeah. There you go. Keep going. Okay.
Yeah, but
Okay,
is it
keep
gonna
going.
see you?
No, not me.
Oh,
You.
really? Oh,
You're
okay.
going to take it right in. Your chair is there.
Yeah.
Okay.
Oh, yeah, if you.
Okay.
Yeah.
And you have to come.
Yeah, cut a little bit, yeah. But if you. You should.
Yeah. If I come close to you, you know. That's okay.
So anything you wanna add close and that we didn't cover, you think people should know about, if you feel free and then anything, give you information.
Okay.
Yeah, so they will contact you.
All right. So sorry now.
No, we on.
Oh, okay. Oh, that's the screen that they're seeing right now.
Yeah, that's just when they see.
Oh, okay. Cool.
So if you want, you could say something to the people on TikTok and other fact too. So yeah.
So this is airing where?
This is on Facebook and YouTube.
Okay, cool.
Yeah.
Cool. That's really cool.
So now they're just playing the commercial.
We don't have no problem to sell the,
if you want
the
to
financial provision.
if you want us to play like you have like just like me, I have like a commercial. Yeah. So you say, you're welcome. We'll do. You could sponsor the show, and then
Okay.
play your ad
Okay, and the show airs every Thursday, right?
every Thursday. Yes.
That's cool. That's really cool.
So let's say you sign up for 3 months.
Okay.
Anyway, that's how I will say anytime you want to come to sell your products, I don't know.
Insurance, everything.
Come here.
What's next?
Come here, we don't have no problem.
What's next?
Nous retournons là, nous retournons Lakou Trankil avec nous, à la voix, et nous still have the guests with us. Kelly James is still there with us. Je ne connais pas Lakou Trankil, c'est ça lié. C'est ça Lakou Trankil lié, et je me dis moi. Nous retournons pour nous finir et nous avons dernière ligne de émission pour nous finir avec tout bail.
So we are back live now.
Yeah.
Yes.
We come back
For the final thought.
Mm-hmm.
Yes. And we still have our guest Kelly Jim with us here, a financial professional.
Mm-hmm.
Yeah.
Nous retournons et nous still avec Kelly James, financial professional. Mes amis, achetez insurance. Stop being selfish. C'est nous qui pour petit, nous qui pour madame nous. Pas penser de qui nèg madame nous va gagner. Les mêmes tout à mourir. Si tu as pensé qui font gagner, pas de assurance qui t'a battu dans la. Mais celle là on a mis nous là pour que on dit comment nous on tige jaloux et buy the insurance even you die tomorrow your wife I don't know them men it's okay your wife could die tomorrow too and then you have another woman. Stop being selfish. Alright,
Yes.
Well,
so even if you don't, want to leave the money, they do have living benefits, so you could enjoy the money now. Like we said before. So I'm gonna let Kelly James just give out his information. You could contact him and and get some life insurance or any other financial product that he has. We work hand in hand. If you have my number too, my contact, you could contact me and I would connect you with him. Also, we're working together. So go ahead, Kelly, you have the floor.
Okay, so what I would say is, when it comes to all insurances, right, they're tools, right? Any tool, if you use it the wrong way, is going to create damage. You can use a hammer to build or destroy. You know what I mean?
Yes, that's right.
So, term insurance has its place. It's a tool that has a specific purpose. Permanent life insurance, like whole life, VUL, IUL, has a purpose. You can use it to help you to, increase your wealth and grow your retirement savings, to protect you against market losses and some of your assets also. There's tons of uses for it. I would just say that you want to speak to someone that would, if it's not me, you want to make sure it's someone that's going to look at what you need and do the right thing for you, right? Because all the policies can be bad if it's not used properly, if it's not set up properly, right? So you just want to make sure you're using it right for your purposes, set up properly for your purposes. Now, again, my name is Kelly James. If you guys want to reach me, you can actually call me at my desk. I'm 718-233-9140. Again, that's 718-233-9140. Directly to my desk.
Yeah, if you could repeat that number.
Yeah, 718-233-9140. Goes right to my desk. If I'm not there, leave a message, or I'm normally there at my desk. So.
Yes.
All right, and that's basically it.
I think.
Thank you for having me, by the way.
You're welcome. I believe we sum it up by really going over, all the main part, and then just like Kelly said, that if you're gonna go to somebody that have like a one size fit all approach, I think that we're gonna be doomed, right? So we always say we have to, cater to your need, not, that's why we don't give, right now we're giving general information, but if that's why, just like earlier when Dawson asked, oh, I need $1 million, we cannot just go, we have to say, okay, let's sit together, let's look at your financial, statement. Let's look at, you as far what is your need. Let's see your budget. Let's see how much income you make. How many kids you have. How many second wife. So, but I'm joking. But just
Why do I know all those
too much information.
If I could pay my insurance, why
No,
do I know?
but it's for us to cater the insurance to you, to your need, just what you need exactly. So that's the thing. So
I don't ask about second wife.
yeah, second. Yeah, he doesn't.
Anyone that has a second wife, it's okay.
It's okay.
I won't ask.
I want to leave something for my family.
Oh yeah, but that's it. I agree. I was joking. But the thing is, if you guys need more information, we really have to sit with you and go over everything, specifically to your need and your want. So again, you could also reach me at the office 516-6734-677, 516-6734-677. Let's start planning for a future, for your kid's future. We talk about, you could use life insurance for to pay college tuition. We also have 529 plan. Also, it's for so many things. Let's do income protection. Before buying that Jordan. Or the red bottom, right? Everybody wanna get expensive clothes, expensive thing. I'm not saying not to do it, but let's protect your income first. So this way you could keep wearing red bottom from years to go. I want to thank the audience, for staying through with us to this hours, because I know, it's not a silent topic like we had before. When we talk about other things, relationship and other stuff. But it is an important topic that we need to know, we need to hear, because I really believe that if we don't know about financial, aspect, we're not gonna be able to go anywhere. We're always gonna live paycheck to paycheck. The next generation won't be better than the last generation. That's what we want to build. We want to build, a legacy that the next generation is better than the next one. And I have a book about finance. I almost forgot. So check out my book. Is on Amazon. Under my name, Frank Bun Home. Oh my God, I'm forgetting the title. It's the financial guideline to wellness and. Oh my God, forever. Anyway, just go under my name, type in Frank Bunholm. You see I have several books, but the one about finance, you need to get it. I talk about the different mindset that people have, all these things. So thank you. I think I went over my time. Thank you, Kelly Jim, for coming in to speak.
Kelly, thank you.
Thank you very much. Appreciate you. Thank you, Dawson, and thank you, everyone.
We're not finished.
Okay.
James?
Thanks again, guys.
Thank you, man.
Take care.
Thank you.
All right. Next time, that's your home here.
Yeah,
You can come anytime you want.
All right, definitely.
All right.
Thank you.
Thanks a lot.
All right, take care.
All right, take care.
Thank you.